How you guys doing today? I hope everyone is having an awesome day, and I do hope that you, your families, and your colleagues are staying as healthy and as safe as is possible right now. So I'm Dr. Stein Smith, chair of the Accounting Working Group, and here on the August 2020 Accounting Working Group podcast, I'm thrilled to have Mark Eckerle with us, who's audit manager at Withum, Smith & Brown in their Emerging Technology Services Group. Mark, happy to have you here.
Thanks for having me, Sean. It's a pleasure to be here.
Absolutely, and to just add some context here and some background, I've known Mark now for Mark, 2.5 years, and so the two of us our paths cross more and more, which I'm sure has actually given Mark some early onset gray hairs, but I always enjoy our conversations, and so I'm really happy to have him here on the podcast. And so to really sort of introduce our conversation and our topic, Mark, I would turn to you to just give us some background and context on you, on your firm, and sort of the role you are playing in it.
Yep. Yeah, so Mark Eckerle, CPA. I am an audit manager at Withum, Smith & Brown in our Emerging Technology Services Group. I'm also the firm's team leader of our blockchain and digital currency group. Within there, we have somewhere in the ballpark of approximately 30 to 35 professionals across all of our services industries like financial services, technology, or outsourced accounting functions, who work in all types of verticals, advisory, audit, tax. These professionals, they work in this space fairly regularly. Our goal is to bring comfort to our clients in the crypto space where there's remains some uncertainty, get our clients on best practices. With the accounting, literature that's been published today, we try to advise our clients on the current landscape of these assets and how to best work with them. Our biggest goal is to make sure we continue to value our clients each and every day. We don't view ourselves as simply just accountants, but as advisors. On the other hand, our goal for Withum is to continue to be a leader in this space as we have been. Just to rattle off a couple things that we've done, we've helped to work. We worked with the first SEC approved token offering. That was a Reg A Plus offering back in July of 2019. We were one of the early leaders to issue the audit of a stable coin, going on more than 2 years now, I believe. I think that was back in 2018, which we perform on a monthly basis. And then we're very happy to announce that last winter, we were the first auditing firm to perform an audit of a stable coin that is backed by a commodity, gold in this case. So as the market continues to evolve, we want to adapt and grow, and that's exactly what we've done so far, especially working in our technology group. It's one thing that we pride ourselves on.
Yeah, no, and I know that the your firm and the folks there are always very top notch and always on top of the hottest trends and sort of fast moving topics out there. And so Mark, to try to peel back that sort of top layer there. I mean, how has it been to be there, sort of boots on the ground, sort of elbow deep in this blockchain sort of crypto space, as it's really almost transformed completely, right? From 2016, 2017 up until now in 2020, I know that I would argue personally that really the entire ecosystem has changed almost completely, right? Sort of pivoting from you focus almost exclusively on Bitcoin to now having audits done on asset-backed coins, having token issues that have the okay of the SEC. So how has it been to be sort of in there, sort of on the ground, sort of dealing with this on a everyday basis?
Yeah, I mean, the biggest thing that we've seen is just the education, right? We want to make sure we educate our clients, make sure they know of the regulatory landscape and kind of what's the accounting guidance for these new assets, essentially. Those are some of the issues that we experience on a regular basis. For instance, like the accounting or tracking mechanism for multiple wallets and accounts. That continues to be a slight issue, but as we've developed, as you mentioned, over the last 2, 3, 4 years. I mean, it seems like an eternity now, but as we've developed over those couple of years, there's been more and more software solutions to help ease the burden on this, particularly from like a tax standpoint as well. As the IRS continues to issue some letters to taxpayers on virtual currency activities, as they call it, we just want to make sure that there's mechanisms out there for our clients and for individuals in order to report their assets properly. Thankfully, the IRS issued some additional guidance last October for accounting for things like airdrops or hard forks, provide some literature on the proper cost basis methodologies. And ironically enough, one thing that we've noticed, particularly in 2020, was the guidance that came down from the AICPA last December.
Mm-hmm.
They provided, I don't know if guidance is the right term. It's a white paper or a best practice, if you will.
Yeah.
But what they noted was that these assets fall into the category of intangible assets, which we were all aware of for private companies.
Sure.
But the one thing that added a little bit of an extra wrinkle to it, if you will, from an accounting standpoint, was their impairment analysis. They suggested the accounting for these assets and recognizing impairment on a daily basis, as opposed to if you think of like goodwill, right?
Mm-hmm.
If you think
Yep.
that's more of an annual or 6 months or monthly, depending on your reporting frequency. But that added a little bit of an extra wrinkle, which most clients aren't privy to. So we presented that white paper to a lot of people to help support and educate them, and it just adds a little bit more work on the back end. But I think at the end of the day, it's all about getting everyone on the same page and making sure that these assets are reported correctly with the existing.
Mm-hmm. Yeah, no, and I would say that really you've mentioned this whole idea of educating clients to help make sure that everybody is on the same page in terms of how these crypto assets are treated, taxed, audited, and all the rest. And I would just add that really, I would say that really, in order to be that sort of trusted advisor, trusted business partner as a firm and as an individual at those firms, I do think that's going to be a increasingly important role. Actually, I would argue personally that it's even more important now to have that role as an educator, as a advisor in this space, because it's moving incredibly fast. But Mark, there is just one sort of nuanced question that I do want to ask in case folks tuning in aren't quite sure how it's different. So if I'm testing a asset for possible impairment on a everyday basis, correct?
Mm-hmm.
How is that different, or is it really different in how it plays out from just marking it to market every day?
So I think at the end of the day, I think the goal, and this is my opinion, is is to have, and these are private companies, commercial standard audits typically, where it's classified as an intangible asset.
Mm-hmm.
But I think the current goal is to just not have an inflated asset on your balance sheet due to the possible volatility in the prices in the marketplace. On 12/31 at year end, the price could have just skyrocketed, and then 2 days later could have just dropped dramatically. So it's not really a true indicator of what that asset is at year end. So I think that's, I believe, why the IRS and the AICPA came out saying that it should be carried at cost at this particular basis. Now, if you're a hedge fund or in the financial services practice, the fair market value accounting is appropriate with the unrealized portion flowing through the P&L or the profit and loss statement. But at the end of the day, when you think about it and reporting it at cost, you record those impairment charges in 1 year through your income statement. And then next year, or even in the same year, if you have a sale of that cost bucket, it's essentially a wash depending on the P&L. Because if you were to inflate that asset on your balance sheet,
correct.
You're just going to have the expense on the impairment charges as well as the different gain on a separate line item on the P&L. So it doesn't, if it's all in the same period, it won't have that much of an impact on net income. Whereas if you're flowing through 2 periods, you'll recognize the impairment charges in year 1, and then the next year you'll have the gain. So it's all about a game of timing, I guess.
Yes. No, and I think even just having this little brief conversation on this one facet of it really highlights just how nuanced and how complicated it still is to actually get these assets valued and actually reported correctly out to the marketplace.
And exactly. And as you mentioned earlier, and I said it before, is our goal is to primarily educate our clients, right? We want to be that trusted advisor. The market has come around for where there is some need for an audit, or just a review, or even a compilation of some sorts, depending on the investor group and the makeup of the company. But early on, that wasn't really a necessity. A lot of clients didn't need or have a need for an audit, so they weren't going through that practice, but they still needed an advisor for their tax practice, for just to understand the current landscape and what was coming down from the regulatory bodies. So that's our biggest issue. What we fall back on is just to make sure that we're educating everyone in this marketplace, because I mean, as you know, things are constantly changing. 1 year feels like 10 years, so it's it's definitely
dog years right now. Yeah,
it keeps us on our toes, that's for sure.
No, and to sort of add onto that point, Mark, what are some of the biggest issues that you are seeing with clients in the current landscape or in the current environment, right? Has the impact from COVID and more client staff working off-site and all of you doing more work off-site from home, has it had an impact on anything, or has it not really changed the underlying issues and obstacles out there?
I mean, I think honestly, with the impact that COVID has had on the market, I don't want to say has been good, but has been beneficial, just based on if you think about the U.S. current economic status. I think it's helped bring some more investors and into this, I guess, landscape to educate them on alternatives out there in the market, whether it's for investment purposes, whether it's a medium exchange. It's helped, I guess, educate and bring new people into this space, which has been a good thing, even though everything else that's going on may not be the best. That has been one shining light for this current market.
No, and I would say that I've seen a trend that's pretty much the same. I would not say that any economic impacts right now are, as you said, good or sort of positive, but I would say that for the ecosystem, I think that some of the conversations that have been had around the IRS economic impact payments, the issues with trying to get aid, unemployment benefits, other financial resources to individuals who are in dire need of them, I think that has highlighted and actually pointed out to people that the current financial payment infrastructure might not be up to speed as to where it is going to have to be going forward. So I would say that sort of that general awareness of sort of where blockchain, where crypto can possibly add some value, I think, to sort of echo your point, has been good for the overall interest out there.
Yeah, I agree 100%. I mean, as we move into more of a digital economy or digital marketplace, there's certainly some things on the horizon which look promising, such as I think in 2020 one of the hot ticket items or two of the hot ticket items are CBDCs, central bank digital currencies.
Nice.
Or DeFi, decentralized finance. They've been two very well talked about items. 2020 has also been a very good year for stable coins. I mean, as I alluded to, I think this current landscape has brought new investors into the marketplace, and stable coins serve as the perfect on-ramp. Pegged to the US dollar, but they give you exposure, or not all pegged to the US dollar, but most. So it helps kind of serve as that on-ramp to investors as to gain some exposure into this marketplace, and working with a digital asset and how that looks and feels and what that looks like on a blockchain. So it helps provide some diversification into someone's portfolio and really gain some exposure.
No, and I would say absolutely. I would say that I've really noticed those kind of same trends also, in terms of asset-backed coins, central bank digital currency, and this whole idea of being able to raise capital without having to go to the banks or any other third parties, which I think is a big change coming up on the horizon. But as you said, that isn't really being talked about much outside of sort of our little echo chambers in the blockchain space. But Mark, I'm going to put you here on the hot seat here. I did not prep you for this question. If we go out, right, outside of 2020, outside of 2021 even, if I were to ask you sort of over the next 3-ish years, right, not 5 or 10 years, because that's just impossible, but over the next, let's say 24 months to 36 months, right, 2 to 3 years, what is the biggest mainstream application of blockchain and crypto that sort of you would forecast becoming part of just everyday life at companies with their suppliers, vendors, and employees? Would it be a stable coin? Would it be DeFi? Would it be a CBDC? Or is there some other application or other sort of business use case that has been coming up more and more often, but that isn't being covered in the way that it's otherwise would be?
Yeah, I mean, I personally am in this space for the long haul. I mean, I view these assets as long-term holds. If I was an investor or portfolio manager, but if from an application standpoint, I'm very curious to see. It had a lot of traction early on. It's kind of died down this year. I'm curious to see where Facebook's Libra goes. Just based on their audience, I feel like that could be huge if everything's done right. Because everyone uses Facebook nowadays, so depending on that marketplace and how that evolves, I would be excited to see that get put into some use. But I think it's safe to say that we are emerging from crypto winter, if you will, for the last 2 years. There's a lot of large financial institutions getting on board with this, and I'd love to see investors add a portion of their portfolio, 1-2% into this space, just to get some exposure. But yeah, I mean, as far as applications go, I think Facebook's Libra in the next 2 years, if that's what I'm putting pen to paper, my prediction down, I think that could have a big impact in this space if everything's done right. I'm throwing that caveat in there.
if it's done right, yeah. That's always the big if out there. Now, and to wrap up our conversation here, Mark, are there any sort of final thoughts or sort of passing thoughts or pieces of advice that you would want to give out to other folks who are tuning into our podcast, whether they work in accounting, audit, tax, or on the other side of it, trying to work with auditors to help them understand how crypto is impacting their enterprises?
Yeah, I mean, the biggest thing is just education. I mean, we're all on the same team here, so it's just making sure that at the end of the day, we educate our clients, we educate ourselves. We want to make sure we're abiding by the rules, the current laws and regulations out there. That's my biggest takeaway when working in this space. It's very nuanced. It's new, so we may want certain things to go our way or certain guidance to come down, but it's going to take time. So I think patience will be critical, and I'm excited to see where the future goes. Like I said, I'm in this space for the long haul, for professionally and personally. So I'll be very curious to see where this goes in the next 12, 24 months, or even 5 to 10 years, like you said.
Excellent. Well, I'm excited too, and hopefully the two of us will continue to cross paths and share ideas. Mark, I say thank you again for being on the podcast with us this month, and I'll be sure to post this up so everybody can share it, tune in, and as Mark said, get educated.
Awesome.
Thanks, Mark.
Thank you, Sean, and thank you, Wall Street Blockchain Alliance.